This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Rekt Capital, a Forbes featured cryptocurrency analyst and trader and recurring guest here on the Crypto Conversation. Welcome back to the show, Mr. Rekt Capital.
It's awesome to be back, Andy. Thank you so much for having me.
So last time we spoke was in the first week of February this year, which I'm sure you'll agree seems a lifetime ago now. It's been an incredible year of volatility across markets. There's been a pandemic. When we spoke in February, COVID was just kind of bubbling under the surface, and the dominant narrative of our conversation in that podcast was, of course, the third Bitcoin halving, which we were looking forward to, which took place in May. Even that seems like, just a lifetime ago, right?
It's definitely been a whirlwind of emotions throughout the past several months. We've seen everything when it comes to Bitcoin's price action. We've seen the extreme fear, and now we're seeing the extreme euphoria. So it's really been an incredible year and a very interesting one at that. But the Bitcoin halving, as we've spoken about in the February podcast, in the immediate aftermath of the whole pandemic fear, where Bitcoin started to sell off, what we spoke about may have seemed a bit, a bit too forward-thinking, maybe a bit too optimistic. But over time, everything we spoke about in that conversation, Andy, it's really starting to play out, and that's the most exciting part.
Yes, well, I agree, Mr. Rekt, and because so here in New Zealand, it's Friday morning, November 6th, so it's Thursday night for you. You're in the UK, and when we were sort of DMing on Twitter early this morning, just finalising what time we were going to talk, and then I I happened to casually look at the Bitcoin price and was surprised to see that it was up over 15k, and mentioned this to you, and well, here we are. Bitcoin is at just a smidge over 15k as we speak today.
Yeah, it's something, a wonderful sight to behold when you just wake up, just to start off your day.
Paint me a little picture of your year. You don't need to sort of give us all the details, but you and I have been trying to arrange this conversation for a month or so now, maybe 6 weeks. And as I understand it, you've sort of got caught up in some of the COVID shutdowns across Europe, right?
Absolutely. It's been a crazy year, but the past few weeks have been pretty interesting as well. I've been traveling between different places, trying to live a little this year, just to try and experience a bit of normal life. And I'm sure all of us can try and tap into that and understand that, because I've tried to travel to a few countries for some short stays, and now that we're at this very pivotal moment where all these countries are starting to lock down, I got stuck a bit in between two countries locking down at the same time, so it was quite difficult, and I apologies that it took so long. I was very excited to speak with you on the podcast, but so many things, and it's these sort of outlier events, these black swan events that are getting increasingly common nowadays. And I'm just happy that we're sitting down today and everything's resolved. I'm back in the UK and just ready to enjoy the continuation in Bitcoin's trend.
Yes, indeed. And look, I think it's probably worked out well that we waited until now, because we now really do have, if it was ever needed, confirmation that Bitcoin is solidly in a bull trend. And we haven't even mentioned the fact that while there's all this, the markets, and it's not just Bitcoin, all markets are up at the moment. Of course, there's a raging pandemic, which is going into a fairly substantial second or third wave, depending on where you are in the world. Record numbers of infections in Europe and, of course, in the US and other places. And the US election right now is on an absolute knife edge as well. So I say this a lot, but it is volatile times in the world.
Absolutely. Nowadays, there's less of an uncertainty when it comes to the pandemic. Before, in March, we saw this in the prices of Bitcoin and all over the world, really, where we saw that extended sell-side momentum for days on end. That's when that uncertainty was really present in the minds of investors and traders, where uncertainty registers as pain in the brain. It's this sort of physiological gap in your brain where you just don't want to feel uncertainty, so you have to act. And this is where we start to see a lot of panic selling, people wanting that liquidity to build their cash resources just in preparation for this pandemic. Now that we have the second wave or the third wave, whichever wave it is, people are a bit more accustomed to what's going on. They know how to act. They know that they have to wear a mask, distance themselves. So it's not just that uncertainty factor is much smaller, but the magnitude of the spread is enormous. It's even worse comparing to the infant stages back in March. So there is a bit of dissonance there. There's a bit more certainty about the situation, but that doesn't mean that the situation is improving. And it's interesting how that's totally changed. And even though COVID's worse now, Bitcoin's price is actually increasing, whereas it was the exact opposite when the situation was much better in the very beginning.
Yes, exactly right. Well, how shall we? Where shall we begin our conversation today? So, last time we spoke specifically about the halving, and you've written a lot about the halving and the sort of the cycles that revolve around the halving, and the kind of the post-halving accumulation, and then things start to take off. And I've seen in some of your tweets lately that Bitcoin appears to be tracking fairly close to your expectations. So maybe we should just cover off some of that first. And the easy way for me to cover it off, of course, is that the third halving was back in May, and that simply means that the Bitcoin block reward dropped from 12.5 Bitcoins to 6.25 Bitcoins per block. So while there used to be 1,800 new Bitcoins mined per day, now it's down to around 900 a day. So that's quite a significant reduction in supply, and quite timely because demand does seem to be ramping up. So what are you seeing in terms of your halving analysis piece?
Well, when it comes to the Bitcoin halving, a lot of investors were anticipating an immediate price jump. So just prior to the halving, we start to see that pre-halving FOMO, as it were.
Yes.
And then a lot of investors start to get a bit disheartened because price didn't really move. Price didn't really appreciate as people had hoped. People were hoping to buy the rumor and sell the news. But the halving kind of just came and went. Yes. Nothing really happened, and Bitcoin was just behaving like your normal stablecoin, just not moving. And this was the case for many weeks at a time. And this was actually starting to, I felt the sentiment on Twitter, just casually scrolling through my feed, where people were starting to actually feel a bit more uncertain about Bitcoin. Why is Bitcoin actually not moving? So this kind of compelled me to look into not just the post-halving price tendencies that we tend to see over time after each and every halving, after every Bitcoin halving, because most of the exponential growth after the Bitcoin halving in Bitcoin's price occurs many, many months after the halving. But I wanted to focus on the immediate aftermath of the halving, and that's why I wrote Bitcoin After the Halving, Everything You Need to Know back in July. And I stated just a few recurring tendencies that we tend to see after each halving. And really the gist of that, these key tendencies, is that after every halving, Bitcoin forms a sideways range. And these ranges last, well, after halving 1, it was a 6-week range. After halving 2, we had 2 ranges, which formed for 4 weeks and then 5 weeks. So in total, around 9 weeks. So coupling this together, when Bitcoin formed a multi-week range after the halving, that was just normal price behavior. And that's something I was really talking about. But it wasn't a compelling insight, because many people, well, consolidation isn't ever fun, but many people at the time, because of that uncertainty, people were actually a bit panicky. Is this actually distribution rather than reaccumulation? And of course, it was reaccumulation. It was just that the exchange of buyers and sellers selling Bitcoin a bit, buying a bit, and just negotiating with themselves, but inevitably forming a higher low within that multi-week range after the halving. I think after Bitcoin halving number 3, I think it took 10 weeks or so, and then it started to break out. And the most important thing here as well is that once we see a breakout from a range, this has happened every single time after the halving. And this is the most wonderful thing about these inherent price tendencies, is that they are a testament to historical fear and greed, but also a testament to human psychology and how people tend to behave the same way over time in the Bitcoin market. It's phenomenal to see, because you see this ranging after the halving, then a breakout to new highs, and then price pulls back just to test the top of that range as a new support. And that support was 9,650, 9,700 roughly speaking, and we actually saw a few wicks not quite test that level, not quite fill that CME gap, which we tend to see CME gaps get filled, but this one didn't. But inevitably, we saw a curl up in price action, and essentially all of these immediate post-halving price tendencies just played out. History repeated itself, and it just continues to amaze me how Bitcoin's price history is continuing to repeat now that we're firmly many months after the halving, and it's just exciting to see not only the price action, but just seeing this work in hindsight. It's great. It's great to see things just play out so perfectly.
Mr. Rekt Capital, I should mention that, so this, I guess it's a piece of analysis you've written, and this is, of course, available on your website. So the first one that we've been referencing is from July, as you mentioned, Bitcoin after the halving, everything you need to know. And of course, yep, link will be in the show notes, and we'll talk about your next piece in a minute, which is Bitcoin's 4-year cycle. But I recall on the first podcast that we talked a little bit about the psychology of trading, and I think you described yourself as being especially interested in the psychology of trading. So it's fascinating when you talk about how, participants in the Bitcoin market or the crypto markets, they do tend to behave the same way over these cycles, which is why someone like yourself, if you can sort of try and pick these trends, that helps you be able to look at what you might expect to happen in the future, I guess. So is it really just that humans, we are unfortunately driven by fear and greed, and we are just quite predictable in some ways?
Absolutely. I think a psychologist called Dan Ariely, he wrote a fantastic book called Predictably Irrational, which really just summarizes human irrationality that's completely predictable when we're placed in certain circumstances. So if we're going to be in a cinema and we start to see some smoke coming up, there's going to be a fire soon, many people are going to panic, and in a whole crowd, they're going to rush to the exit. And this is going to impede their exit. This is actually going to impede their survival, their chances of survival. One of the best ways to actually go about it would be to form an orderly queue, But that never happens because people get emotional. They result to emotional behavior, sometimes very detrimental to your chances of survival, and in the market, detrimental to the health of your overall portfolio. So in these certain circumstances, of course, the cinema example was an extreme one, but I don't mention this extreme example without a coincidence, because the market really does tap into our extreme emotions constantly. It's constant, because if we cross the road and a car is about to hit us, there's a very close call, we might feel a bit of adrenaline, a bit of panic, and it's not exactly the same, but it's a very similar response to what we'd experience in the market when the price is dropping and we don't have a clue about technical analysis. So these extreme emotions are felt on a daily basis if you're watching the charts on a daily basis. And it's very interesting because these extreme emotions will compel you to make some irrational decisions, like to panic sell or to FOMO buy the peak in Bitcoin's price action. So these extreme emotions need to really be checked. And there are a few ways to do that, but of course, learning technical analysis, I'm an analyst, so learning technical analysis just to put some logical parameters on what is essentially a historical transcript of human greed and fear. That is a price chart, just understanding these patterns. And really just that just opens up a new perspective, and you don't feel compelled to really tap into those emotions. You try to look at the price chart a little bit with a cool gaze, and just to understand those emotions and not necessarily experience them yourself.
Very good analysis and very good advice, Mr. Rekt Capital there. But, well, here's a question for you then. So the interesting thing about Bitcoin at the moment, so Bitcoin is, as we said, it's right on 15,000 US dollars at the moment, and that is effectively the highest it's been since January 2018, right? So, and the interesting thing, of course, is there doesn't seem to be much awareness or any hints of FOMO in the, let's say, the mainstream retail sector, or just your average Joe Blow on the street, right? There aren't any newspaper headlines, so most people aren't really aware of what's happening with Bitcoin. And yet, there will be some people who are Bitcoin holders or are aware of it. They'll be starting to feel some FOMO. So put this into context. What is it a good time to buy right now? Because it's surely we're just on the crest of going up a big hill. So if you are feeling FOMO now, what do you do?
I think that's a fantastic observation, Andy, just talking about the FOMO and how we've seen an impressive rally we haven't seen for essentially many, many years now. It's great to see the strength in Bitcoin's price action, and it's a fantastic segue into the 4-year cycle article that I wrote, because now that we're at 15,000, prices haven't been at this region since late 2017. What is one to do when you're feeling FOMO? You want to get into Bitcoin and just buy a bit so that you're part of the uptrend, and many people are going to be FOMOing in. Before I address that question, I like to just talk about your observation where there isn't that FOMO, or at least that retail FOMO. People aren't getting as excited as what we once remember back in 2017. If people, some of the listeners were back in 2017, and I'm sure many of you have been. But the FOMO, the sentiment is much different, and Google Trends on the word Bitcoin is actually quite reflective of that. We're not really seeing much of an uptick now for the word Bitcoin compared to when we saw it back in 2017, where you saw a massive peak. Check out the chart, guys. It's just, you just see what a shift it is, and partly the reason for this, that we haven't really seen that shift, is that the way the average Joe Blow, as you said, Andy, thinks about Bitcoin is 20,000, below 20,000. Well, we've kind of seen Bitcoin below 20,000. It's nothing new. But once it breaches that psychological inflection point that is 20,000, we'll see a massive chain reaction, cascading FOMO and buy pressure towards the upside that's going to really unleash that parabolic rise for Bitcoin. So 20,000 seems to be that inflection point for a lot of people. Now, back to what I mentioned about the FOMO. People are going to be feeling FOMO, but this is actually a very good segue into the 4-year cycle article where I essentially just talk about the 4-year cycles we see in Bitcoin's price action. And there is always a key resistance that tends to weigh down on price throughout the 4-year cycle. And in this 4-year cycle, that price level is 13,900, which happens to be the June high of the 2019 rally in Bitcoin's price action. So many people think that the inflection point is 20,000. But technical analysis actually suggests, the 4-year cycle suggests, that this inflection point is 13,900. And the reason that this matters is that once we've breached that region, and we have already, and we top out on this rally, one of the next technical steps that's going to happen is that 13,900 is going to be turned into a support, so a source of buy pressure and demand. And this is likely to happen in early next year, early 2021. And the reason I mention this technical aspect, Andy, is because we tend to see throughout time that once we breach that very key resistance in the 4-year cycle, that resistance turns into a support. And this is this is what technical analysis just say, a resistance to support flip. It happens all the time, but it just showcases that sellers are weak, buyers dominate, and then they just take over that certain price levels, and sellers are to be not ever heard of at that price level, or at least in the immediate, in the short term. So 13,900 is likely to turn into the new floor, and that's good news in one way, and bad news in another. And the good news is that because we don't have much price data for Bitcoin at these levels, it's kind of easy to just use technical analysis and try to understand where we could see a retrace towards and then a bounce and whatnot. So it's quite a bit easier to understand now where price could go, top out, and then retrace towards. But the bad news is that because 13,900 is going to turn into a floor in early 2021, we're really running out of chances to buy Bitcoin below 13,900. And it's quite stressful to think about it that way, because we've seen so many, we've had so many ranges in the 9,000s for many weeks at a time. There were so many chances to buy Bitcoin, and many people, I'm sure, tried to buy Bitcoin. And I know a lot of friends who were even asking me about it, but they didn't take the plunge, and now they're really interested, but they're feeling the FOMO. They don't know what to do. And my point here is that the 9,000s are going to feel like a fantastic buy opportunity, and then a few months in the future, 13,900 is going to feel like a fantastic buy opportunity. And these levels are just going to be moving higher and higher. These price floors are going to be moving higher and higher. So if somebody's feeling FOMO right now, as always, never FOMO. Of course, you'll feel these emotional impulses, but the most important thing here is to not act on them, because that's where you have the choice. You have a choice to act or not act, on a emotional impulse, but you don't really have a choice in experiencing that emotional impulse. So there is a bit of a dichotomy there. But the most important thing here is that you do have a choice in not panic selling, not FOMOing, and not succumbing to boredom when price is not really moving, and just consolidating. And mind you, if price starts to consolidate at whichever point, it's most likely going to be reaccumulation. But in any case, very important not to FOMO at this time. Wait for a retrace. We haven't seen a very strong retrace in a very long time. The most recent retrace was minus 21%, and in bull market retraces, in the history of bull market retraces, minus 21% is absolutely the shallowest retrace in Bitcoin's price history, which is just a testament to how bullish people are becoming. Not only retail investors, and it's institutional investors and miners holding their Bitcoin. It's a variety of factors, but it's a fantastic time to be in the crypto market. But we have to wait for that retrace because it will come, And it's just wise to be prepared for it and do everything you can to FOMO into extreme fear, which precedes financial opportunity, rather than FOMO into extreme greed, which precedes a sell side price action and a correction.
Excellent analysis again. It just feels though, things are very different from 2017 in terms of, number one, the on-ramps into Bitcoin are much slicker and much easier. And, recall in 2017, at the end of 2017, and most of even the big exchanges like Coinbase, they were kind of crashing and going down, and they couldn't hope to try and process all the signups. But now, if we're talking in America at least, people have just apps like the Cash App to seamlessly and quickly buy a little bit of Bitcoin. And of course, the PayPal news. Once PayPal onboards their users, and I think that's due to happen soon, or if not early next year. And then at the same time, you mentioned the institutions, and there's obviously people like Square and MicroStrategy that have gone public with these enormous buys, and it's certainly setting up an exciting 4-year cycle. So I guess this is my segue. This is obviously speculation, but given all this sort of bullish news, and let's assume that there are some buyers out there, and there will continue to be buyers out there, how do you see this bull market playing out in terms of the 4-year cycle?
That's a fantastic question, Andy. You've mentioned a lot of things that investors and traders would only have dreamed about back in 2017. Yes. And it's fantastic to see all of these things come into a reality. But the way that I think about Bitcoin, and specifically the price action of Bitcoin, is I don't think about the fundamentals for a second. I think about the technical structure, what's going on. Because back in March, on March 3rd, I actually retweeted this today. On March 3rd, I posted the 4-year cycle for the first time. And we were just below 8,000. And reading the comments is actually quite interesting with the perspective of time, because many people were very pessimistic on Bitcoin trying to eclipse 13,900, which is what needs to happen for Bitcoin. This year, it needs to eclipse 13,900 and manage a 12-month candle close, which just is a fancy way of saying that buy pressure kind of needs to crystallize itself above 13,900 just to reaffirm it as a new support, as a new form and source of buy pressure. So on March 3rd, this wasn't really feasible. Not many people could see that happening, but that was what the technicals were showing to us. And over time, the technicals have progressed to the point that I was expecting back in March. And all of this fundamental stuff also happened. So I kind of feel like charts are able to foresee certain things. It's a bit of a kooky, wacky way to think about charts, but for some reason they can foresee certain changes in price action, and this goes for patterns overall. If you see a rising wedge on the price chart, this usually tends to precede a correction, and usually before that pattern resolves itself, suddenly out of nowhere you see a catalyst come out and say, I don't know, the whatever exchange has shut down, they're going out of business, and that's the catalyst that promotes that sell side action. And then you're quite amazed by how the price action was telling you that something bearish was going to happen in the next few days, and then you have that catalyst. So I'm just trying to paint a picture that the technicals tell a story beforehand, and then somehow things tend to play out later on. So in terms of the fundamentals, that it's fantastic. It's fantastic that everything is happening. Things are falling into place. Things we only could have dreamed of in 2017 are actually turning into a reality, and there's much more of that to come. And the 4-year cycles suggest this, because once we see Bitcoin rally past, and it's already happened actually. I'm just looking at the article now, which is from a week and a half ago, and we're just below that level in the article. But whatever the case, in any case, Now that we've pressed past 13,900, we now need to turn that into a support by the end of the year. And the thing that's going to happen now, and this is tying in with previous price tendencies that we see in the previous 4-year cycles, Bitcoin is going to eclipse 13,900, which it's done, but it's not going to eclipse 20,000 as many people think will happen this year. What tends to happen is we eclipse that really important level, in this case 13,900, but we don't eclipse 20,000. We kind of top out in between these levels before turning 13,900 into a support early in the next year, early in 2021. And once that happens, we're going to see a new all-time high for Bitcoin's price action quite early in 2021, according to the 4-year cycles. And we kind of have to understand why this exponential price growth will occur in 2021. The way a 4-year cycle works is you can just divide the 4-year cycle into 4 candles. Candle number 1, 2, 3, and 4. Candle number 1 is the most exponential candle of them all. You see the most growth here. You see a new all-time high here. And you see a lot of retail interest FOMOing into the price of Bitcoin, dragging price to higher and higher levels as we see this cascading buy pressure reach euphoric proportions. And then in that's candle number 1, the most euphoric one. In candle number 2, you see price start to top out, and you see a bear market actually occur for the next year, really. And then candle number 3 is essentially bottoming out after that bear market. And candle number 4 is the recovery and continuation phase. So as you might know, we're in the recovery and continuation phase right now. And the key technical thing that this candle needs to do is close above that very key resistance, which is 13,900. So by the end of 2020, December 31st, January 1st, we need to look at that 12-month close. If it's above 13,900, then Bitcoin's most likely confirmed a new exponential uptrend into 2021, and we'll see a new all-time high there. But the thing that I want to just stress here, Andy, is that once we do see that new all-time high in 2021, we have to understand that there is a rate of diminishing returns on investment for Bitcoin investors. In the previous 4-year cycles, you saw really exponential returns. But over these 4-year cycles, even though these euphoric candles, the first candle in the new 4-year cycle, these candles were euphoric, there would be a new all-time high, there'd be fantastic upside movement, but there would be a declining tendency in the amount of return on investment that a Bitcoin investor could expect and anticipate. So it's very likely that we'll see that diminishing rate of return into 2021. And if we just assume that this declining rate of return is going to remain constant throughout time, then that could mean that Bitcoin in 2021 will rally to as far as 90,000. And the thing to bear in mind here also is that many people are talking about 100,000, and this is quite a psychological level. A round number that people immediately think about. It's a cognitive heuristic that we humans tend to make. We think about 10,000, 20,000, 100,000. We never think about 99.9.3 thousand, whatever the case. We never look at the detailed numbers. We always think about the psychological round numbers because it's easier for us to cognitively process in our minds. So 100,000 is that very key resistance in the next cycle, most likely. And the reason I say 90,000 in the context of the 4-year cycle is that the full candle will most likely take price to 90,000. But there tends to be some upside wicking, some upside volatility in these candles as well. But just like the candles, Andy, just like the candles declining in their rate of return on investment, the candles are declining as well in this rate of return, but also the wicks to these exponential candles are declining as well, which only just means that the last FOMOers, the final FOMOers, are FOMOing into Bitcoin, buying price at unsustainable highs, euphoric highs before the peak, and these FOMO buyers are trapped in their positions and price starts to decline. So that sort of FOMO at the very peak is declining, that sort of small detail. So given the fact that I mentioned that 90,000 could occur given on this 4-year cycle. And bearing in mind that this upside wick could also happen, that last bit of euphoric FOMO just to end the cycle, that could very reasonably bring price to that 100,000 level, which is quite interesting because 100,000 is being lauded as this level that's quite achievable and should be the next peak in the cycle. So very interesting confluence there in terms of the technical side and in terms of Bitcoin's 4-year cycle. But of course, this 4-year cycle is just wrapping up, and it's very exciting to see what the next 4-year cycle holds, especially the most euphoric and exponential portion of it, and that's the candle number 1, which is going to occur in 2021 next year.
Wow, a lot to take in there, but very interesting. So yes, I mean, I think a lot of people would obviously be very pleased to see Bitcoin reach 90,000 and perhaps wick up to 100K sometime within the next 12 months or so. It has just occurred to me, I don't know if we spoke about it on the first podcast, maybe we did, but, you know, someone who has been even more bullish than people, than analysts such as yourself, of course, is Plan B with the you know, the controversial stock to flow model. And look, I mean, no one will be more happy than him to see the current price action starting to you know, really ramp up. But how would you, I'm sure you've looked at stock to flow. What do you think of stock to flow, and how does that play into 4-year cycles?
Absolutely. We actually spoke about that. You're right, Andy. In the previous podcast, there was a lot of controversy around it. Many people were a bit skeptical about it. Many months later, not many people are skeptical about it. In fact, they are quite hopeful. So that sentiment has kind of changed, and people think about the stock to flow a little bit differently now. The predominant sort of thought in people's minds is probably, wow, could this continue to be correct? And I think it really is all about that, Andy, that as long as it's correct, then it's correct. It's nothing to immediately try to refute or rebuff. So far, and even at the time when we were talking about this, Andy, in February, the stock to flow, I think, was on track to being followed for Bitcoin. And I think now more than ever, especially this year, the stock to flow is following, the price of Bitcoin is following the stock to flow almost perfectly. And the thing that I want to actually really emphasize in this stock to flow are not the perfect following, the alignment of the stock to flow with the Bitcoin price. Sorry. But I want to emphasize the deviations that you tend to see beyond the stock to flow. And this is an idea that I want to explore actually in my newsletter, the Rekt Capital newsletter, where I explore all these different topics, the 4-year cycle, the crypto money flow cycle, Bitcoin post-halving price tendencies. And this is also an idea that I really want to explore because these deviations tend to occur beyond the stock to flow model, and price deviates substantially beyond the stock to flow model. So as long as we tend to see what we've seen so far, so great alignment of Bitcoin's price with the stock to flow model, and then if we start to see deviation from the stock to flow model, then you're going to start to see, okay, wow, there's something here, and it's something to really pay attention to. So I'm not quick. I don't have a knee-jerk reaction to jump in and just refute a theory. I think back in 2019 and 2020, early 2020, my article and Plan B's article were kind of juxtaposed, and people were trying to find similarities there, and definitely different forms of analysis arrived at very similar conclusions, and that's the most interesting part here. But definitely, if it continues to work, then there's no need to try and jump in there and say, okay, we have to refute this, because so far so good. It's very promising for sure.
Yes, and look, I think most listeners will be all too familiar with the stock to flow model, but it essentially it suggests that, you know, Bitcoin is due to, if it's on track and following the model, to hit 100K, I guess, yeah, within the next year or so, and then I think it looks like that kind of forms the next floor before the next move up, roughly the same 4-year cycle. But of course, the model is just a model, and when you talk about the deviation from the model, that simply means the volatility up or down. And I think that the best way that I've heard that described is simply it's like the drunk guy who's stumbling home late at night, or walking the dog, or, you know, sometimes you're going to be up stumbling above the line, and sometimes you're stumbling below the line, but, you know, the line is the sort of the gravity that pulls you back in, right?
Yeah, exactly. And sometimes you fall into the bushes. And I think the stock to flow was very good in outlining those bushes, because even when the March 2020 crash happened, there was that deviation, but it never really peaked beyond, I believe. I don't think it peaked beyond the volatility band, as you explained. And that's quite interesting to note as well.
Correct. Do you want to? You did mention your newsletter. Do you want to just give a quick shout out to your newsletter and your crypto trading course? You know, you might as well give them a quick plug while you're here, and then we'll finish off maybe looking at that other one, which is the crypto money flow, and we'll talk a bit about altcoins, because we haven't touched on that yet. But do a quick promo.
Absolutely. I mean, the Rekt Capital newsletter it's something I publish 3 times a week, and it's a very useful framework for me personally, because I love to create this research for the community. I love to talk about 4-year cycles, what we can expect after the halving for Bitcoin. How does the Bitcoin halving influence Bitcoin's price? And these are research pieces that I published every month or 2 months. It takes a lot of time to publish this sort of research. But I created this newsletter to just have this framework to create this research once a week, and to publish this research and just become a bit more prolific and consistent in it, because it really is something I'm passionate about. And now that this newsletter is out there, I'm producing this research. I've never been this productive when it comes to these research articles, and it's just these insights are compounding, they're gelling together. I wrote a recent article about how to time altcoin bull markets and bear markets based on altcoin market cycles, and also spoke about historical analysis of altcoin hype cycles, and all of these things just gel together, and these insights are just so powerful. They can really change how you view the crypto market. And the whole thing here, Andy, for me was to just make this affordable, because I'm hosting this newsletter on Substack, and they didn't allow me to put in a lower price than $5. I wanted to make it much cheaper than that, but $5 a month for newsletters 3 times a week, and every Monday I post a research article like the ones we've been speaking about today. On Wednesdays I talk about a crypto market review, talking about Bitcoin and the short-term movements, Ethereum as well, and how it's behaving in the money flow channel, as well as altcoin hype cycles, what we could see from altcoins going forward, and where they could potentially trend reverse. And on Friday, I just host a general altcoin market review, where I chart TA requests, 10 to 15 altcoin TA requests made by valued subscribers of the newsletter. So it's a fantastic community of really hungry investors just to learn more about the space, and learn about these historically recurring tendencies, about these phenomena. And I'm incredibly proud that we've built such a community, and I've decided to keep the early bird discount of $5 a month for a little longer, because I want to keep top quality research at an affordable price, and that's the most important thing to me. And this also ties with the whole ethos behind the Rekt Capital newsletter, ties in with what I'm trying to do with the course as well. And the technical analysis course essentially gives you all the tools you need to just understand the psychology inherent in the price action, so that you can learn how to navigate these patterns and investor behaviors, so that you don't lose money and actually can make some profit, just to change your life and change your lifestyle, improve your lifestyle. And I think this technical analysis course is also quite a powerful tool. Technical analysis changed my life personally, because I used to be an emotional investor. I'd FOMO in, I'd panic sell as well. I wouldn't know what I'm doing. And it was only until I learned about technical analysis that I really understood how to really look at price and how to analyze it. And it's definitely something worth looking into. And of course, last time on the podcast, Andy, we hosted a special crypto conversation discount for the course of $50. And I'm more than happy to run this one back again with you for crypto conversation listeners. $50 off if you type in the discount code crypto conversation to the Rekt Capital technical analysis course. And of course, whoever, of course, buys the course will be able to get in touch with me via DMs. I really want to stay in touch with my students, keep up to date on their progress, and just hear what they're struggling with when it comes to price action and charting. And I'm more than happy to be helping out my students in my DMs. So that's something to get excited about, the Rekt Capital newsletter, and also the podcast exclusive discount for the technical analysis course.
Oh, very nice. What a plug. And, well, all sounds great. So what I'll do, Rekt, is I'll put just links to all those platforms and the details in the show notes to this episode. And the easiest place to read it is, of course, on bravenewcoin.com. Find the podcasts section, and then Rekt, this episode will be there with all the details as well. But otherwise, look in the show notes. Let's go to a very quick break, and then we'll come back. And instead of doing, we've done the crypto conversation hot take round before, Rekt, which I always enjoy, so we won't repeat that. Instead, we'll talk about crypto money, flow cycle, and altcoins. Back in one moment.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, we're back, and of course, I'm joined today by Rekt Capital, a returning guest. And for all of Bitcoin's bullishness, here's my take on altcoins, right? People tend to get all excited about altcoins, or they get depressed about altcoins, and I can imagine that your take would be, if we take it back to, simple human psychology, because we are unfortunately just biological animals that are ruled by biological impulses, which means fear and greed, basically. Altcoins are just, they're just irresistible to a large or a certain sector of the market. So no matter how depressing, altcoin bear cycles can get, eventually, and no matter how ridiculous or depressing some of the the projects look, and that's true across past ICOs or maybe the DeFi cycle this time around, you know what I'm saying, right? People are attracted by those sort of opportunities. Take it away. What's the crypto money flow cycle, altcoins, DeFi? Where are we at?
Absolutely, yeah. Food tokens, as you mentioned, Andy, the whole DeFi craze. You have all these different tokens coming out. It's very difficult to keep up. We have 6,000 or however many thousand altcoins now, and just 3 years ago you had half that, or even 75% less than that. So it's crazy how the altcoin space is growing, but it is growing for a reason. And the thing about altcoins, and tying this in with the money flow cycle, so I'll talk about a bit the seasonality of altcoins, which I like to call the altcoin hype cycles, and then we'll transition into the money flow and how money moves through these altcoins within these altcoin hype cycles. So it is interesting how all of this stuff is quite linked together. So when talking about altcoin hype cycles, altcoins have they always schedule releases, updates, mainnet releases, launches at the end of a quarter. Every quarter, and you can notice this, at the end of every quarter, you tend to see many different altcoin projects. They have announcements, updates, releases, and there is no coincidence to that. They have to have some updates every now and then just to publicly announce that the project is being worked on, that things are moving forward, just to give investors a bit of insight into how they're moving forward, and just to keep the investors calm at the same time, just so that they know that the project is still running, it's not abandoned, and it's not going to go to zero. So at the end of every quarter, you tend to see a lot of these events happen. Now, the thing with altcoin hype cycles is that heading into these events, into the end of these quarters, you tend to see a lot of hype towards altcoins. And that's understandable because a lot of these altcoins have these events and people are getting excited about it. People are anticipating price appreciation as a result of a mainnet release or an announcement. And that's why people start to buy a little early on in anticipation of price appreciation, and then so that they can sell the news. So it's essentially buying the rumor and then selling the news once the hype has translated into price. And that's a very key thing here, that hype translates into price, because once that hype is translating into price, that's where FOMO and greed takes over. People become more risk-seeking. They start to diversify their portfolio into more and more altcoins just to have that better ROI, just to be able to make a bit more profit. So they really do channel in. You see this hype translate into price, and FOMO and greed take over. So this occurs near the quarter, near the end of the quarter. And then once those announcements are done, people have announced things have been updated, mainnets have been released, you tend to see sell-side price action immediately after the halving, or not the halving, the hype cycle, the quarter, the end of the quarter. So essentially, a few weeks before the end of the quarter is when altcoins really start to pick up. There's the maximum pessimism towards altcoins at that point in time. People aren't really interested in altcoins then. There aren't any things announced, really, heading into the end of the quarter. Extreme fear resides, maximum pessimism, but extreme fear precedes financial opportunity. This is where altcoins tend to capitulate. People don't want any part of them. And altcoins actually happen to bottom out at this stage because the sellers can't sell any longer. The sell side action can't go any lower. Sellers are exhausted. And apologies if you can hear the fireworks going off. They're not celebrating the podcast or anything. It is a bonfire night. So apologies if you hear that, but...
That's right. So 5th of November and 5th of November, Guy Fawkes night in the UK at the moment. So yeah, we had Guy Fawkes here in New Zealand last night, and that's all right. Bring on the skyrockets.
In a few weeks' time, probably altcoins are going to be firing like the fireworks as well. But in any case, at the a few weeks before the end of the quarter, that's when you see maximum pessimism really precede that financial opportunity, and bargain buyers start to buy altcoins at that time when the hype is the lowest. But then that hype starts to pick up as these projects start to release these dates for announcements and so on. And then hype starts to translate into price, and then you see the FOMO. And this just happens every time. A few weeks before the end of the quarter, you tend to see bottoming out in altcoins, and then you see price appreciation. And this has happened throughout every quarter over time, really. In the newsletter, I actually talk about how this altcoin hype cycle model that I created, it maps out the changes in altcoin valuations over time quite nicely. Of course, there have been a few deviations over time, but that depends on whether we're in an altcoin bull market or in a bear market. And of course, this time round, we had a very exuberant and ecstatic quarter two, which kind of dragged on a little bit longer than usual, but that's because of the altcoin bull market. So it's very important to understand that these market cycles can distort these hype cycles, but generally there is a seasonality to these hype cycles, and that just ties in together with low hype and then high hype. When it's low hype, extreme fear, that's when bargain buyers tend to average in and get the best possible price. That's when the risk far outweighs, or at least the prospect of reward far outweighs the risk of downside. And then price appreciates, and then you have the highest moment of hype where there is a very high risk and a very low prospect of reward, and then you see the sell side price action. So this sort of these altcoin hype cycles happen throughout time, seasonality, and this seasonality and cyclicity is because of that psychology: extreme fear to extreme greed to extreme fear again and extreme greed again. So we're in a period in the market right now where Bitcoin really is taking over. And this is a good segue into understanding the money flow cycle, because during these altcoin hype cycles, near the end of the quarter, for some reason, Bitcoin tends to consolidate near the end of the quarter. So for instance, May, June, July, that was quarter two, really. It was consolidating after the halving. And as we know, after the halving, Bitcoin tends to consolidate for many, many weeks, which actually helps and aids investor money flow into altcoins. And at the same time, you have the end of the quarter at around that period. So that's when altcoins really start to take off. So these stars really do align. And I'm going to talk to you guys a bit more about the money flow cycle in particular, because we've covered the altcoin hype cycles, the seasonality of it all, the cyclicity, not only in the hype movement, but also in human psychology, from fear to greed and greed to fear again. When it comes to the money flow cycle, every investor starts off with fiat. They have to have pounds, they have to have a cash position, they have to have a euros or US dollar. They have to have a cash position to be able to purchase Bitcoin, and they're always going to purchase Bitcoin because Bitcoin is it's the market leader. It's the main cryptocurrency in the space. And when you have fiat in the very beginning of the money flow cycle, of course, people use that fiat to buy Bitcoin. So that money trickles into Bitcoin. And then Bitcoin starts to go up into an uptrend, and then once you start to see Bitcoin really enter its parabolic advance, everybody's really interested in Bitcoin. Nobody's really interested in altcoins at that time. In fact, people they panic sell altcoins in order to chase the Bitcoin uptrend, and Bitcoin is being the main primary focus of investor money flow. And this crypto money flow cycle is very much predicated on psychology, on how that psychology influences behavior, and risk seeking. So at the moment, money is in Bitcoin very firmly, but then as we'll see the parabolic advance top out, we might see a bit of a pullback and then potentially a range for consolidation. That's going to enable the next stage of the money flow, where Bitcoin is no longer that attractive because it's not really moving, it's consolidating in a range, or it's pulling back a bit. And this is where investors start to think to themselves, wow, I've made a killing on this Bitcoin uptrend. What other cryptocurrencies are there? Let me check out Coinbase, my exchange. Let me see, there's Ethereum here. That's the second one on the list. You have Litecoin here, you have Bitcoin Cash. That's okay. So there's a second Bitcoin. So what are they different? Why are they different? Are they Bitcoin? Are they a copy of Bitcoin? And that's essentially the sort of thought process that Bitcoin investors overall in crypto start to make. So they start to buy a bit more of Ethereum. They start to experiment. They start to diversify their portfolio. And this diversification behavior is essentially investors enjoying the profits from the Bitcoin uptrend and wanting a bit more of those profits. So a factor here is greed, and having that risk-seeking approach, a little bit more of a risk-seeking approach, because the next stage of the money flow cycle after Bitcoin, so you have fiat, Bitcoin, and then large caps. Large cap altcoins are Ethereum, Litecoin, Bitcoin Cash, Dash, and so on and so forth. Excuse me. And this is where that money goes in next. And the main large cap here is always Ethereum. It's number 2. Everybody kind of knows Ethereum. Of course, most people know Bitcoin, but then the next stage to that is knowing Ethereum. And a lot of altcoins are actually built on Ethereum. So whenever money flows from Bitcoin into large caps, predominantly Ethereum, we tend to see Ethereum appreciate. So the way that this works is that once Ethereum starts to appreciate and Litecoin and all these other large caps, which will offer slightly higher profits than Bitcoin. So for instance, Bitcoin might rally 10%, then Ethereum might rally 20% because it's a smaller cap coin compared to Bitcoin, but still much more stable than what you see from the other smaller cap coins. So if Ethereum rallies 30% and then forms a range, very similar to Bitcoin forming a range for large caps and Ethereum, once Ethereum rallies, trying to catch up with the Bitcoin uptrend, then the investors start to think to themselves, wow, well, this is great. I've made more money with Ethereum or Bitcoin Cash or Litecoin than I made a few weeks back with Bitcoin. What other altcoins are there? This is great. And this is where, Andy, you start to see the greed as we see money, investor money flow lower and lower into other smaller and smaller capped altcoins. The greed increases incrementally, and the risk-seeking approach, the risk appetite for risk increases. The risk appetite increases. People want to take on more risk. They start to diversify into more assets, and they start to diversify into smaller and smaller capped altcoins, which, of course, have a higher prospect of reward, but at the same time, they have a higher risk of downside. So while Bitcoin, of course, Bitcoin could be considered a high-risk asset, but it is definitely less risky than the large cap altcoins, which are a little bit more riskier, but definitely much more stable than the next stage of the money flow cycle. Mid caps. So you have fiat, Bitcoin, large caps, and then mid caps, which are much smaller than smaller capped altcoins than Ethereum or Dash or so on. And then you have the small caps, which are the most riskiest, but they rally 15,000%. And of course, it's very easy to lose your money on them. But this is just generally what happens. The risk appetite increases, diversification behavior increases, greed increases, and euphoria. And this is essentially the human psychology that creates this money flow cycle. And in fact, once you see small cap altcoins, all of these food tokens, Andy, that we spoke about a little earlier, once you see them rallying, that's a moment that you have to be very, very cautious about altcoins in general, because they are the very final assets in the money flow cycle to rally until we actually see the end of the money flow cycle. So the reason that these small cap altcoins rally so much is because investors are circulating their profits from Bitcoin into Ethereum, into mid caps, then into small caps. And this profit circulation is causing these exuberant rallies. And of course, if you're having more and more profit being circulated into smaller and smaller altcoins, then of course, this profit is going to generate really impressive returns. But of course, at the same time, the risk mounts considerably as well. So essentially, when you see small cap altcoins rally, that's the end of a altcoin hype cycle, most likely. And we saw that, Andy, we saw that with the food token, with the whole DeFi movement. Food tokens were rallying, and they were the last to rally before finally we've just been seeing this extended downtrend on altcoins ever since. Just altcoins have been capitulating, and we're back to square one in terms of the money flow cycle. People are back in Bitcoin.
Yes, indeed. Fantastic summary of the kind of, the wider crypto ecosystem, trader, investment cycle, and what a volatile cycle it is. And I mean, a lot of people are always skeptical of, a 2017 style altcoin boom. And look, I admit to some doubts myself, but I think it just comes back to investor psychology. That's what it's all about. And if enough people make enough money on Bitcoin, as you say, then they just start reinvesting those profits, seeking more profits, and that is essentially all the cycle is. But yeah, there's just extreme greed and extreme fear because the liquidity and everything is just amplified in the crypto markets, isn't it?
Absolutely. And many people, I remember many years ago, people were saying that we're never going to see another alt season. Bitcoin's never going to reach new all-time highs. It's very important to just understand that speaking in absolutes is not the way in investing.
Strong opinions weakly held is the best approach, isn't it?
Oh, yes. Yeah. Absolutely. I love that saying. That's a good one. This sort of volatility, it's of course, as the market is maturing, like we mentioned, Andy, earlier today in the episode, that we're seeing a diminishing rate of return on Bitcoin investments, and that's normal as the market matures. But at the same time, we're seeing the same thing in altcoins. And if we just look at a very simple metric of altcoins, which is altcoin dominance, just a proportion of how dominant are altcoins in crypto. So how much money relative to how much money is in Bitcoin? How much money is in Bitcoin relative to how much money is in altcoins? And at the moment, altcoins are in September of last year, altcoin dominance bottomed at around 30%. And we've never seen altcoins bottom at an altcoin dominance of 30% ever before, really. They always bottomed 10%, 15%, 20%. So you're seeing that altcoins are here to stay, essentially. Of course, many altcoins won't survive. A lot of them will some might be scams, unfortunately. Some just won't work out. That's just part and parcel, kind of natural selection in the market. But altcoins as a asset class, they seem to be maturing as well, and they're here to stay. And the most impressive and the most promising projects are going to be around, and you're seeing this in Ethereum, for instance. Ethereum, with Ethereum 2.0, you're starting to see investors really interested in this and the whole DeFi movement. So you're really starting to see not only Bitcoin mature and as a result produce lesser and lesser returns, but still exponential and impressive. You're going to start to see the same decrease in volatility in altcoins as well, but at the same time, there is going to be a very enjoyable exponentiality to altcoin rallies nonetheless.
Yes, indeed. Well, that feels like a nice place to finish, Mr. Rekt Capital. Thank you for talking to me today. Look, just to recap, Bitcoin is still at 15K. America is yet to decide a president. We could see Bitcoin wick up to 100K sometime next year, and stock to flow model is still on the table, yet to be invalidated. So, closing thoughts, take us out. What a time to be alive.
Yeah, I couldn't put it better myself, Andy. Really appreciate you inviting me back here. It's always a pleasure talking to you guys, and to you, Andy, and to listeners at home. So thank you for the invite. What a time to be alive, guys. We've for those of you who have been here for many years, there are going to be many people telling us that we were quite lucky to get in at below 10K, below 9K, 8K, whatever the case, but and say that we were lucky or something to that effect. But there was nothing, that luck really didn't have much to do with it to hold through the bear market, to hold through the March 2020 crash. So luck definitely had nothing to do with it. The fact that Bitcoin is rallying and you guys are exposed to Bitcoin, it's thanks to you and that courage that you had in those trying, extremely fearful and pessimistic times. So I think that's something to be, or at least be a little bit proud of, because it's not easy to live in a very volatile, fast-paced roller coaster of a ride that is the crypto market. But definitely lots to look forward to going forward, and I can't wait.
Very nicely said. All the best, Rekt. Can't wait to do it again. We'll talk soon. Bye for now.